USDT, Tether, Risk Analysis and Due Diligence Framework. This comprehensive checklist and analysis framework is designed for both long-term investors and active traders evaluating the safety, stability, and investment risks of holding or trading USDT, Tether. Each critical category is rated low, medium, high risk, with detailed explanations, red flags, verification methods, and practical tools. 1. Reserve backing and proof of reserves risk rating. Medium explanation verification. Tether publishes quarterly attestation reports, most recently by BDO, a top 5 global accounting firm, showing that assets exceed liabilities. As of Q2 2025, Tether reported 162.6 Bs in assets versus 157.1 B in liabilities, with 127 Bs in U.S. Treasuries, 7.7 B in Bitcoin, 6.7 B in gold, and 8.8 B in secured loans. Red flags. No full comprehensive audit has ever been conducted. Attestations are point in time and do not guarantee ongoing solvency. Reserve composition includes riskier assets, Bitcoin, gold, loans, alongside cash and treasuries. Verification methods. Review Tether's transparency page for latest attestation reports. Scrutinize reserve breakdowns for non-cash assets and changes over time. Compare liabilities, tokens issued, to reported assets. Practical tools and data sources. Tether's official transparency portal, BDO attestation reports. Blockchain explorers for circulating supply. 2. Transparency and reporting risk rating. Medium to high explanation frequency. Quarterly attestations, daily updates on token supply. Quality, improved in recent years, but still lacks the granularity and frequency of USDC's monthly, fully audited reports. Credibility. Attestations are not audits. Details on reserve composition can be vague or aggregated. Red flags. Vague asset categories, lack of real-time or continuous reporting, and no Big Four audit involvement. How to spot weaknesses. Look for broad asset categories, e.g., other investments, without specifics. Check for changes in reporting standards or sudden shifts in reserve composition. Compare Tether's disclosures to those of USDC or DAI for benchmarking. Practical tools and data sources. Tether's transparency and attestation reports circles USDC attestation reports, for comparison, S&P Global Stablecoin Ratings, 3. Liquidity and redemption risk rating, medium explanation. Redemption, Tether claims 1.1 redemption for verified users, with 7 BIDs redeemed in 5 days during the May 2022 crisis. Risks. Redemption is only available to KYC'd institutional clients, not retail users. Mass redemptions could stress liquidity, especially if non-cash assets must be liquidated. Liquidity of underlying assets. U.S. Treasuries are highly liquid, but Bitcoin, gold, and loans may not be in a crisis. Verification methods. Monitor redemption volumes during stress events. Check the proportion of reserves in highly liquid assets, cash, T-bills. Watch for delays or restrictions in redemption processes. Practical tools and data sources. Tether's attestation reports, reserve breakdown, on-chain analytics for large redemptions, Nansen, Glassnode. Exchange order books for USDT, USD pairs, 4. Reserve composition, risk rating, medium to high explanation. Composition, over 75% in U.S. Treasuries but significant allocations to Bitcoin, gold, and secured loans. Impact, Treasuries are low risk but Bitcoin and gold are volatile, and loans may be illiquid or default prone. Non-cash assets can impair rapid redemption and peg stability in a crisis. Red flags. High or increasing allocation to riskier assets. Lack of detail on loan counterparties or collateral. Verification methods. Scrutinize attestation reports for asset breakdowns. Track changes in reserve composition over time. Compare to USDC, which is almost entirely cash T-bills. Practical tools and data sources. Tether's attestation reports S&P Global Stablecoin Risk Assessments. 5. Audit and attestation credibility. Risk rating. High explanation attestation versus audit. Attestations are point in time, limited scope reviews, Audits are comprehensive, ongoing, and include internal controls. Big 4. Involvement. Tether uses BDO. Top 5, not Big 4. No Big 4 audit has ever been completed. Historical gaps. Tether has a history of delayed, incomplete, or inconsistent reporting, and has faced regulatory penalties for misrepresenting reserves red flags. No full audit, especially by a Big 4 firm. Changes in attestation providers or reporting frequency. Regulatory findings of misrepresentation. Verification methods. Review the scope and methodology of attestation reports. Compare to audit standards used by USDC or PYUSD. Practical tools and data sources. Tether and BDO attestation documentation. USDC audit reports for benchmarking. 6. Regulatory and legal risk rating. High explanation history. Tether has faced major regulatory actions, including a 41 million CFTC fine and an 18.5 million NIAG settlement for misrepresenting reserves and commingling funds. Ongoing investigations. DOJ and other agencies continue to investigate Tether for potential bank fraud and sanctions evasion wallet freezes. Tether has frozen wallets at the request of law enforcement, raising centralization and compliance concerns. AML KYC. Tether enforces KYC for direct redemptions, but secondary market trading is less controlled. Red flags. New or ongoing investigations, especially in the US or EU. Large-scale wallet freezes or blacklisting. Regulatory bans or restrictions in major jurisdictions. Verification methods. Monitor regulatory news and enforcement actions. Track wallet blacklists and freeze events on-chain. Practical tools and data sources. Regulatory filings and press releases. Chainalysis for compliance monitoring. Tether's transparency page, blacklisted addresses. 7. Smart contract and blockchain risk rating. Medium explanation contract security. USDT contracts are based on standard protocols, ERC20, TRC20, etc., and have undergone audits. But centralization risks remain due to admin controls, mint, burn, freeze. Cross-chain deployments. Each chain has unique risks. Some may have less mature security practices. Centralization. Tether can freeze or blacklist addresses, which is a risk for censorship and operational control. Red flags, unannounced contract upgrades or changes in admin keys. Security incidents on any supported chain. Over-reliance on a single chain or bridge. Verification methods. Review contract code and audit reports. Etherscan, Tronscan. Monitor for admin function usage. Mint, burn, freeze. Use on-chain analytics for contract activity. Practical tools and data sources. Etherscan, Tronscan, Solscan audit reports from Tether and third parties. 8. DPEG and run risk rating, medium explanation. Whale movements. Large USDT transfers can signal market moves or stress. Blacklisted wallets. Tether regularly blacklists addresses at law enforcement request. Mint burn events. Sudden large mints or burns can indicate changing demand or redemptions. Exchange flows. Inflows, outflows to exchanges can precede volatility. Verification methods. Use Nansen's token, God mode and smart money dashboards for whale tracking. Monitor Tether's transparency page for blacklisted addresses and mint burn events. Set up alerts for large on-chain transfers. Practical tools and data sources. Nansen, Glassnode, Chainalysis, Tether's transparency page 12. Bridging and interoperability. Risk rating. High explanation. 2. Bridge vulnerabilities. Cross-chain bridges are a major attack vector, with over 2.8 B lost to hacks, including USDT liquidity fragmentation. USDT liquidity is split across chains and bridges, increasing operational risk. Wrapped USDT. Bridged, wrapped USDT is only as secure as the bridge protocol. Red flags use of unaudited or new bridges. Large USDT flows through bridges with poor security history. Bridge hacks or exploits involving USDT. Verification methods. Security incident trackers. 13. Historical behavior. Risk rating. Medium explanation. Market crashes. USDT has generally maintained its peg during major market events, with brief deviations, e.g., May 2022, 0.9485, but rapid recovery. Bank runs. Tether has processed large redemptions without default, but stress events highlight the importance of reserve liquidity. Regulatory crackdowns. Tether has survived multiple regulatory actions, but each event increases scrutiny and risk. Verification methods. Review historical price charts for peg deviations. Analyze redemption and burn data during crises. Study regulatory and legal timelines. Practical tools and data sources. CoinGecko, CoinMarketCap, historical prices. Tether's transparency page, historical mints, burns. Academic and market research reports. 14. Professional staker, trader view. Risk rating, medium to high, varies by use case. Long-term investor, key risks. Regulatory, legal. Reserve transparency, systemic dependence. Best practices. Diversify stablecoin holdings, USDC, DAI, PIUSD, limit USDT exposure, monitor regulatory developments, and use insured custody solutions. Metrics. Reserve composition, audit status, market share trends. Active trader key risks, peg instability, exchange liquidity, bridge security, funding costs. Best practices. Use USDT for liquidity and arbitrage, but settle profits in more transparent stablecoins. Monitor on-chain flows, set volatility-adjusted stops, and stress test for peg events. Metrics. Exchange inflows, outflows, whale activity, funding rates, bridge security status. Practical tools and data sources. Nansen, Glassnode, Real-Time Analytics, S&P Global, Circle, MakerDAO for alternatives. Professional trading platform risk dashboards, professional risk summary. Should a large investor or professional trader hold significant USDT or diversify into alternatives, USDC, DAI, PYUSD, etc.? USDT remains the most liquid and widely used stablecoin, making it indispensable for active trading, arbitrage, and cross-exchange settlement. However, its risk profile is elevated due to ongoing regulatory and legal scrutiny, including past fines and current investigations, lack of a full independent audit and persistent questions about reserve composition, centralization of reserves and operational control with exposure to offshore jurisdictions, systemic risk due to its dominance. Any loss of confidence could trigger a market-wide liquidity crisis. Bridge and interoperability vulnerabilities, especially for cross-chain activity. For large investors and professional traders, USDT should be used for its liquidity advantages, but not as a sole or core reserve asset. Diversification into more transparent and regulated stablecoins, USDC, DAI, PYUSD, is strongly recommended, especially for long-term holdings or treasury management. Active traders should monitor on-chain flows, peg stability, and regulatory news in real time, and be prepared to rotate into alternatives during periods of stress. Scenario planning for depegging, blacklisting, or regulatory action is now best practice. In summary, USDT is a powerful tool for liquidity and trading, but its risks are non-trivial and require active ongoing management. Diversification and vigilance are essential for both long-term investors and professional traders.